Imagine walking into a dealership in a beat-up 2012 Honda Civic and trying to buy a brand new Ferrari. Oh, and you're paying with half a bag of cash, half trust me, bro, and you want to be the driver immediately. That is essentially what GameStop CEO Ryan Cohen just tried to do to eBay. In one of the most bizarre corporate showdowns of the decade, the meme stock kingpin launched an unsolicited $56 billion bid to swallow the e-commerce giant whole. He claimed he could turn eBay into a legitimate Amazon killer. But eBay's board just looked at the math, looked at the execution, and officially slammed the door in his face, calling the offer neither credible nor attractive. So how did a brick-and-mortar video game retailer currently worth around $10 billion try to buy a company 4 times its size? And why did the math completely fall apart on live television? Let's break it down. Let's look at the offer. GameStop offered $125 per share in a mix of cash and stock. Cohen's grand vision? Merge the two companies, install himself as CEO with zero salary, and slash $2 billion in annual costs within a year. Even wilder? He wanted to turn GameStop's remaining physical retail stores into a national network for eBay live commerce, product verification, and trade-in drop-offs. The pitch was, hey, our staff already grade trading cards and hardware every day. Let sellers walk into a GameStop, verify the item on the spot, and get a trust badge on eBay. On paper, it sounds like an interesting ecosystem play. In reality, the money simply wasn't there. GameStop's cash reserves sit around $9.4 billion. Combined with up to $20 billion in debt financing from TD Securities and GameStop's total valuation of $10.7 billion, Cohen was still staring down a massive $16 billion shortfall. When CNBC's Andrew Ross Sorkin asked Cohen to make the math and explain where that missing money was coming from, things got awkward. Cohen repeatedly refused to give a straight answer, saying it was on the website and that it was just half cash, half stock, apparently failing to realize that printing that much stock would absolutely obliterate and dilute his existing shareholders. When Wall Street started laughing, Cohen went full meme mode. He launched a publicity stunt claiming he was selling stuff on eBay to pay for eBay, listing his own baseball cards and even pairs of socks, accompanied by hand-signed letters. He spent a week publicly roasting eBay's financial performance on social media to frame himself as their corporate savior. But independent observers aren't buying the savior narrative. In fact, famous Big Short investor Michael Burry sold off his entire stake in GameStop right after the eBay bid was announced, delivering a scathing review of Cohen's strategy, stating he has a crappy business and he is milking it best he can while taking advantage of the meme stock phenomenon to raise cash and wait for an opportunity to make a big buy of a real, growing cash cow business. And Burry has a point. GameStop has been aggressively closing hundreds of stores to stay afloat, shutting down nearly 600 locations in late 2025 alone. Their past attempts to pivot into new revenue streams have been chaotic at best, pulling out of crypto in 2023, shutting down an NFT marketplace months later, and recently hosting a desperate Trade Anything Day where employees were forced to accept literally anything for store credit. So what happens now? Well, eBay's chairman Paul Pressler made it clear that they don't trust GameStop's governance, they don't trust the financing, and they are moving on. But Ryan Cohen isn't known for backing down quietly. He's already fired back an email to the board, accusing them of ignoring the economics and threatening to bypass them entirely to take this deal straight to eBay shareholders for a hostile takeover. Will this go down as a stroke of absolute corporate genius or a totally foolish multi-billion-dollar meme disaster? Let me know what you think in the comments below. Is GameStop buying eBay a brilliant pivot, or is the math just completely broken? Don't forget to hit that like button, subscribe for more tech and gaming breakdowns, and we'll see you in the next one. Peace.